Looks like I'm about to get stopped out. Um, I bought above the bull bar, so it got a little bit messy in here, but ended up being long. 5 micros, stop below, thinking that it's a possible low of the day, double bottom, higher low, um, and got stopped out. So I took $100 loss, I think, maybe a little bit over $100. And here um, I bought on the way up here because we had the Globex high at 4,400. So I bought on the way up, and I thought it's probably better to. I should have bought the bar three close, and so I exited right away. And then when the fourth bar closed on its high, closed as a bull bar, I bought that close and exited at the Globex high. So I think I made 25 here and lost 100 here. I think I lost 100. So down, let me see. So down 60 on the day. Try it again above this bull bar. 1 times my risk is at 4 points. So looking for a minimum of 4 points, but possible swing up to the lower high here and potentially get a second leg up from the initial impulse. So possible swing and possible low for the next hour, but would need to see a strong break above the moving average. And the higher time frame contexts, we're in a trading range, in the middle of a trading range. So I'm not sure how likely it is for us to get a trend on the higher time frames, but on the 5-minute chart, we could easily get up to this lower high. I think there are probably buyers below this third consecutive bull bar. So hoping for buyers here and a new high. I'm trying to become a lot more patient and be okay with taking losses. So here, normally I'd be exiting break even, and I had that string of losses where it wasn't actually a string of losses, but I had this string of trades where I made like 5 wrong decisions in a row of whether I should stay in or exit. And when I stayed in, I got stopped out, and when I exited, it went in my favor. I think I just have a habit because I've been focusing so much on scalping when I started, and I'm so focused on the entry bar and the follow through bar that I start to get nervous at the first, second, and third minute of my entry or my trade. So as soon as I enter, I'm focused on how the first bar is going to look. So I am worried about what it's doing in the first, second, and third minute. And what I should be doing if I'm taking swing trades, where the math is better, is I should start worrying on bar 5, 6, and 7, and not minute 1, 2, and 3. So I want to give it a chance to do what it still can do after 3 bull bars and a pullback. This is just 3 bull bars and a high 1. It's not a good signal bar, and it's below the moving average, but it's still on the swing. And there have been so many times recently where I make a judgment call that I shouldn't be in the trade anymore because it pulled back a little bit, and it just doesn't matter. And so if I'm actually willing to sit through pullbacks, like here, for example, I don't remember where it was, but yeah, it was this day where I bought above here and I got stopped out. And then I bought above here and this bar started to pull back. It was still on the swing. It was still a double bottom, higher low, and it was on the swing still. But I decided that this was too much of a pullback. But it's not necessarily. And at this point, I risked. I exited break even, so I was risking to my stop to that break even point where I exited. So I was risking 4 points, and I decided it's not worth risking 4 points because of the pullback. But had I just stayed in and been patient, I could have made, if I exited below a bear bar down up here, I would have made, what is that? 9 points. So at that moment, when I decided that it wasn't looking right, I was risking 4 points to potentially make 9. and that would have been a worthwhile investment to sacrifice those 4 points, um, and the fear that caused me to exit break even because I didn't want to risk those 4 points. Had I been okay with it, I could have potentially made 8 or 9, and that's been happening so much. Obviously, the market's been trending a lot, so um, there have been many of those opportunities. But here as well, I bought above there, I'm pretty sure, and I got out break even. But had I just exited 1 point below any bar or below a bear bar, I would have exited somewhere up here, and that's like, I don't know, 20 points. And so all those little, like, even if I get stopped out below, let's say I get stopped out a point below here, that can happen 20 times, and I would make up for that with one trade. Now, obviously, I don't want to do that. I don't want to be a low probability trader and just wait for like one or two massive winners. But it's just a principle that I'm deciding at every moment: is this pullback too deep, and is this pullback too dangerous to stay in? And does it change the premise? And I'm just not very good at that. So at this stage of my trading, it might just be better for me to accept that I don't know if this is a bad setup. I don't know if this changes the setup and makes it bad. Let me just follow very strict rules. Exit 1 or 2 points below a bar, exit below a bear bar, exit below low twos, and just wait and let the pullback happen, and then see if it goes to higher targets. So I think this has been happening a lot recently, and that's kind of made me, it's kind of reinforced it. I've known it for a while, but it just reinforced it that at every moment when I'm exiting break even, I'm giving up the potential reward for that setup. And so here, if I had exited break even, I'm risking 4 points. Maybe it goes up to this lower high, and that's 8 points. So I'm okay with that. Even if I get stopped out here, this pullback isn't necessarily enough to worry me. And maybe it would worry me, but maybe I'm wrong. And I don't know if I'm ready yet to make those judgment calls. And this obviously, like, this seems pretty obvious. It's 3 bull bars and a small bear body, so it's not that scary. But it's just a principle that I'm trying to, like, maybe even just create a rule. I mean, I don't want to do that, make it so concrete, but like, wait 5 bars. Or what Al says sometimes, just go to Walmart for an hour and come back. I think that's something worth considering, not actually leaving the computer, but maybe. And give it 4 bars, give it 5 bars, give it 10 bars, and change the time frame that I work under. So here, if I'm taking this trade, it's a swing setup because it's not a high probability trade. So let's assume that it's under 40%. Let's assume it's 50%, and that means I don't take profits until 1-to-1 unless I'm severely disappointed. And because my disappointment criteria are not very accurate right now, only clear exits, so only clear low twos, and only exiting below clear bear bars, closing below their midpoints or on their lows. So I think that is going to help me stay in for longer. Then I might swing to the other extreme where I'm just constantly waiting too long. Just want to exit partial at 1-to-1 if I can. And so maybe I'll swing to the other end and be waiting way too long. And I could be protecting profits by exiting a little earlier. And so maybe that will happen. But I'll also, in the process, catch trends like, I don't know where it was, but like this day, and make 20 points. And I will potentially catch trends like this day and make 30 points. I don't know. I think I bought here. I don't know. Actually, I might have missed this day, but it was just at every moment I'm like, let me just buy and put my stop at the swing low and just leave, or just leave it. And I'm just so scared of that one being the day that doesn't trend. But it really doesn't matter. If I wait too long, I'll mess up some, but I'll also catch some really big trends. So there's always going to be the trade-off. But I think right now I want to focus on this extreme, which is be a little bit extra patient, a little bit over patient, and get out of the habit of worrying during the first 2 minutes of every trade. I will exit below this bar if it closes below its midpoint and below the moving average. So I will exit below this bar because it's a low 2. So I'll exit below that, and if it closes above its midpoint, I'll exit 1 point below that. So now that we've had 2 legs up, I'm more willing to put my stop in below a bar. So I move my stop to break even now, still giving it a chance, because now we have 2 legs up. I wouldn't want it to reverse the entire breakout, and even then, it still could be on the swing. It still is on the swing. Even if it comes down to my break-even point, it could form a double bottom here and then continue the swing higher. So this is a little bit of a compromise for me. I gave it room. I gave it a chance to break out, get a second leg up, and now I'm okay with putting my stop at break-even. Because if this bar closes on its low, I'll exit below because it's 2 legs up, and no matter where this bar closes, because it's already 2 legs up, I'm going to exit a point below the bar. So putting my stop at break even, I think, is okay for this scenario. And so what I mentioned before is, although I want to give it room, I don't want to become like an actual swing trader in the sense that I trail with swing lows. That's not the type of swing trading I want to do. It's just swing trading for this leg up. So I don't want to see a 10 bar pullback and then a new high and then a 10 bar pullback and then trail with swing lows. That's not the type of patience I'm trying to develop. It's more within this rally, can I give it a chance? And so for me, the stops would be 2 points below a bar, a point below a bar, exiting below bear bars. But I'm not even doing that right now. So that's what I want to work on. I don't want to sell here and put my stop above the swing low and then keep trailing it down. That's not the type of swing trading I want to do. Right now I'm up $50. But I don't want to just exit here because by keeping my stop below the sell signal, I'm risking 3 ticks. At the price it was at 43.91. So I'm risking 3 ticks. And if it doesn't trigger the sell, it can go up to my 1-to-1 target. And that's 2 points. So risking 3 ticks to make 8 ticks. I have to be willing to sacrifice those 3 ticks to potentially make 8. And the sell is not active until it triggers below the sell signal. And this is not even a great sell because it's a tight channel up, but it's still not a sell yet unless it goes below that bar. And so I have to be okay with risking those extra 3 ticks and waiting for the stop to get hit because there's a potential reward of 8 ticks. And so I'm trying to see the market more in that way and be okay with losing that profit instead of just exiting just to take $50. So it ended up triggering the sell. Wasn't as strong of a breakout. Breakout and follow through above the moving average would have been nice. I'm pretty happy with that, waiting through all this and keeping my stop below the sell signal. So I made 5 ticks on that, I think. So a little bit over $25. And now if we come back down here and form a double bottom, then I'll look for another buy signal. So here it did reach my 1-to-1 target. And I think in general, when the second leg is stronger like this, I probably don't have to exit below there because we're probably going to get one more leg up. But because it was a failed breakout above the moving average and a decent sell signal, I decided to exit, but would have been okay for my first target. And had I not exited here, I would have exited 3 contracts here and then the other 2 below this bear bar. So it could have been a good trade. Yeah, I think this is fairly reliable in the sense that when we get a strong breakout above a small double top bear flag here during, in the beginning of a potential swing trade, I think it's okay to not exit here, but I also think it's okay to exit. So I think it's a discretionary call, and so I could have left my stop down here, or I could have waited to exit a point below the bar, but here I decided to exit because I think partly because I had already lost here and then got stopped out here, so I didn't want to let this one turn into a loser, but that shouldn't be a reason to exit. That is still a criteria for me to exit below a low two, so I'm okay with that. I just once I get more comfortable waiting, I might wait through this one as well because of the stronger breakout. So now here I bought again. We're above the moving average, so finally broke above the moving average, and small pullback bull trend, pullback high two, and breakout pullback buy. So I think it's a reasonable buy. Right now I'm going to keep my stop below here, but I won't let the stop get hit just in case we need one more push down. If we get a strong breakout and follow through, I'll exit. If we get another bull bar closing on its high, I'll add 3 more contracts. So right now I'm long 2 micro contracts, and if we accelerate up, I'll add the other 2. Sorry, add the other 3. Or if we get a breakdown and another reversal up, I'll add the other 3.
Stop filled.
Just bought 3 more micros above that bull bar. So we got that second leg down after the surprise bar here, and another buy signal. So now I'm in 5 micros, and I'll put my stop below this signal bar, or this leg down, and see if we can get a swing up from here. I think at a minimum we should get above this buy signal because I thought it was a reasonable buy on the E-mini. It's a II buy and a high 2, so I think it's a reasonable buy. I think we should get up there. Maybe not now. Maybe we have to break down first, but I think we should get up there at some point, and this is a good time because it's a second entry buy. So my average price is here based on my 2 entries. So that puts 1 times my risk up here, looking for 3 points. I think that's a very reasonable target. So like I mentioned in the, I think it was yesterday or 2 days ago, like these are situations where I've structured the trade so that even if I'm just guessing, it's a 50-50 bet, a coin flip, I'm going to make 1 times my reward, or I'm going to lose that 1R. But either way, even if there's no edge based on price action and I'm just guessing, then in the long run, that's a break-even strategy minus commissions. So at the very worst, it's break-even. And I don't think that this is a random trade. I think it's a reasonable setup. We're still on the swing above here, and it's a small pullback bull trend. So I think there's a price action edge. And so having a 1-to-1 here, I think is very reasonable. So that's what I'm trying to do. I'm trying to take the pressure off each trade, take the stress off for me to have to be right. And I think that managing it this way makes it easier, and it accomplishes that goal. So see what we get. Not only do I want to make it easier and less stressful, but I also want to capitalize on larger moves where I feel like I'm undercutting myself by exiting way too early and trying to make price action reads that I'm not yet capable of making. I'm going to try to take off 3 contracts at this is 13 ticks, so that's 3 points in 1 tick, which is equal to my risk. And then the other 2 I'll try to hold to see if we get a strong breakout and a trend out of it, which is unlikely, but we could rally for 4 or 5 points. That's a surprise breakout, so I think we should get at least a small second leg up after the first pullback.
Order filled.
Got filled on 3 contracts. I have 2 left. I exit 1 point below any bar. So I'll keep my stop there, 1 point below. It's still a strong rally. I'm not sure if this bar getting 1 point below the prior bar actually means that the move is invalidated. But I'm going to follow that rule for now, especially since I've already taken more than half off at the 1-to-1 target. So I'll leave the other 2 and I'll leave it here for a 1 point stop below the bar and see what we get.
Stop filled.
Oh, got stopped out there. But back to around break even on the day. This is including commissions. Normally I show this one. I normally have this on the side here, but I think it makes me feel better. But I think it's less useful. So so I'm up $19 technically, but not including commissions, and I am down $5 including commissions. So back to break even on the day.